This week, Vanguard Group claimed the title of world's biggest bond fund, taking that away from PIMCO. For some perspective, I'm joined by Michael Herbst, Director of Manager Research for Fixed Income Strategies at Morningstar. Michael, welcome. We know PIMCO held this title for more than 2 decades. Bill Gross went out the door. Assets followed him. What's the significance of PIMCO's loss as #1 and Vanguard's gain?
I wouldn't read too much into this change beyond just the simple math that one fund is now larger than the other. The Vanguard fund, as a bond index fund, is essentially a proxy for the market. So for them, being larger and being able to replicate a greater slice of the market is beneficial for investors.
In terms of the fact that this bond fund is an index fund, is it just another sign of the end of active management? Do you expect to see investors to continue to put their money into passively managed funds that do track indexes?
Again, I wouldn't read too much into this in terms of this being the so-called triumph of passive investing over active investing in fixed income. There are strong arguments to be made for passive investing in fixed income, but if we think about the uncertain market environments ahead, I think there are a number of investors that are taking a passive approach that may stand to be disappointed.
I was just going to go there with you next. Do you think that actively managed funds might become more in vogue as we start to see interest rates rising and the environment changing very dramatically over the next couple of years, potentially?
Well, I think some investors may certainly realize that working with managers that have proven successful at navigating tricky market environments may be advantageous to buying the so-called market as a whole. The main caveat there is there's nothing necessarily good about an active manager. It's more a question of whether or not that active manager is good.
Michael, in terms of fund size, whether it's Vanguard or PIMCO being the largest, what about for investors as a whole? Is there any difference in how returns look, whether you are in a bigger or smaller bond fund?
Not necessarily. Much of that is going to be driven by the strategy of each individual fund. For example, a larger asset base for an index fund like the Vanguard fund is actually beneficial because it increases the chance that that fund will track the index very closely. It also lowers the expenses for investors in the Vanguard fund, which has been a very powerful combination to beat. On the active side of the fence, there's nothing that necessarily says that a larger or smaller fund is necessarily going to be better or worse for investors. Something that we'd point out is that PIMCO was very successful managing a very large asset base over time. They've gotten a lot of attention for the outflows, but they've gotten less attention for the fact that those outflows haven't really had a big impact on performance. The fund has actually performed quite well since Bill Gross left.
And I know you are pretty bullish on the investment team at PIMCO overall, even without Bill Gross.
That's correct. Virtually the entire team has remained intact. Obviously, Bill Gross's departure is a big departure. He's a very skilled investor, and they would all say the same thing. But everybody who is still in the chairs at PIMCO was essentially trained and raised and developed by Bill Gross. So the process that he and the team honed over time is still the one that's being used at the fund. It's proven very successful over the long term, and we've got every indication that it'll be as successful going forward.
So can PIMCO potentially reclaim the title of biggest bond fund, or from an investor perspective, does not really matter so much?
That's a question that everybody's asking. It's hard to say whether or not PIMCO even wants to reattain that status. They are first and foremost focused on delivering performance for their existing shareholders. What we've seen over time is that asset flows are very, very difficult to predict. So these two funds could flip-flop if passive investing disappoints investors in the fixed income space going forward, or PIMCO could reattain part of its former status as largest bond fund in the world. But beyond bragging rights, there's not a whole lot of significance to read into it.
Michael Herbst at Morningstar, thanks so much.
My pleasure. Thank you.
I'm Rhonda Schaffler for TheStreet.